Financial statements. So what are financial statements? Financial statements are the formal records of a position of a business, person or entity that is prepared for stakeholders or investors. Financial statements outline the most important pieces of information as there's so much. They are prepared to allow numbers to be easily interpreted rather than having numbers everywhere which lead to confusion. Financial statements are the separate pieces of the puzzle which come together to represent a larger picture of the company's performance. So there's four main statements, which is a statement of comprehensive income, statement of changes in equity, and statement of financial position, known as a balance sheet as well, and lastly, the statement of cash flows. The statement of comprehensive income is basically revenue minus expenses. This statement generally outlines success and failure of a business if they're receiving high revenue, which could mean success, and low revenue, which could mean a failure for a business. So statement of financial position is a basic accounting equation, which is assets equals liabilities plus equity. So it shows at a given time a company's resources and its claim against those resources. As you can see on the right hand side, the liabilities plus equity equal to the total assets on the left hand side. So the statement of changes in equity shows the company's equity at a particular period. In this example, the particular period is the month ending 31st of January 2015. The statement of cash flows shows cash inflows and outflows where money from the business is going in and money from a business is going out. So they are categorized as operating, investing, and financing. Just like a typical teenage cliche love film, the statement of comprehensive income, statement of financial position, the statement of changes in equity, and statement of cash flows all have relationships within each other. The statement of comprehensive income, the net profit goes to the statement of changes in equity. The statement of financial position, the balance and retained earnings, comes from the statement of changes in equity. The statement of changes in equity, the ending retained earnings, goes to the statement of financial position. So how do we know if all this accounting financial statement information is accurate? So, the most accurate and consistent representation of a company's financial performance is guided by the accounting standards called the International Accounting Standards Board and the Australian Accounting Standards Board. But lastly, financial statements have limitations, such as the historical cost principle, which records assets as the price they were purchased. So as you can see, the price comparison within the years. Thank you for listening.